just manage your credit and your debts as best as possible before getting into real estate, because I think with home ownership, there's a lot of expenses that people don't account for, such as like maintenance, property taxes, things that might go wrong and that need fixing out of nowhere. That's your responsibility now. And if you don't account for those things when they pop up, you're scrambling to kind of fix those things and deal with those things. But you want to make sure that you've eliminated as many other expenses as possible, so that when those things pop up, you have
a little more of a cushion.
Exactly, to deal with them as they come.
Hello, everyone. Dondre Homer here. Welcome to the DHomerRealEstate podcast, where the focus is to make real estate, personal finance, and self-development digestible, fun, and relatable to everyone. I really appreciate it if you like, comment, subscribe, download, write a review, 5-star, anything to help the algorithm. Today's episode 5, trust me, I am elated to have this individual on. This individual, let's just say this. He has made a huge impact on my life, more than he thinks. Just him as a person, him as someone who's just genuine, someone who's really caring, someone who is authentic. And honestly, he's just someone that I guess is who's here just to help you as a person to grow. And the person I'm talking about is none other than Royston Simon.
That was a very official introduction. I like that one. You had me feeling very flattered. Thank you for having me, man.
Yeah, man. How was your day?
My day was really good. We're at the middle of the week. It's been a very good, productive week. Busy, but that's a good problem. So
that's amazing. That's amazing. Stressful stuff. I'm not gonna hold you, but God is good. I usually start off with icebreaker questions. I have 3 questions for you, and I just want you to answer as honestly as possible.
Gotcha.
So the first question, because I know that you are into basketball, what is your all-time starting 5?
Ooh. You caught me off guard with that one. I thought we were going to talk strictly finance and real estate. You got me here talking about the basketball.
You feel me?
We can get into that. Are we talking about like favorites? Because I am willing to say that I have favorites that are not the best particularly. So
okay, you know what? That's fair.
Let's go with favorites.
That's fair.
Okay, at point guard, I gotta go with Penny Hardaway.
Really?
Yeah, that's
6'7".
That's my guy.
Okay.
Yeah, he was one of my favorites growing up. Shooting guard, gotta go with MJ. I'm an MJ guy. Do not bring any of the LeBron talk to me.
All right.
MJ's the GOAT.
Mm-hmm.
At the 3, that is tough. I'm gonna come back to that one. At the 4, I'm gonna go Kevin Garnett.
Okay.
At the 5, I'm gonna go Hakeem Olajuwon. At the 3, that is tough. As of right now, I'm gonna just say Scottie Pippen, but I feel like I could come up with someone that is above him.
So no Larry Bird,
no
LeBron.
No, he's close, but not my favorite. Like, I give him his respect. If you want me to make the best top 5, I'm gonna put LeBron at the 3.
But your favorite? He's
not my favorite. No.
I hear you. I like that. Respectable.
Thank you.
Question number 2. What is the best advice you've been given?
I've gotten a lot of good advice. I think the best I've gotten, though, is don't be afraid to make mistakes.
Tell me more about that.
I am by no means a perfect individual. But I just feel like every mistake that I have made and I've been cognizant of, like, I've always bounced back. And I've always been like someone that can take a lesson from it. And it makes me approach things the next day so much better. And like, I'm someone who I look back in retrospect a lot, maybe a little bit too much sometimes, but I can always appreciate the growth from that point. So in any situation where I've come, like wherever I am today, I can identify where I was like maybe 2 or 3, 4, 5 years ago. And I'm like, yo, that Royster from back then would be super happy to see where I'm at right now, like in retrospect. So like, I find the humor in a lot of things. So like, even like a huge loss I would have taken or a big L,
Mm-hmm.
I'll laugh at it now. Like I'll be like, that was crazy. I might have been like I'll laugh at the stress that I was in back then, and like seeing like how I'm good now. I'm like, yo, what was I bugging about?
You're bugging.
Exactly. So I'm like, I think that's a biggest lesson to me, because I'm like, it makes me kind of impervious to like being brought down or permanently broken.
Yeah.
Because I always keep in mind that I got through it. I'm here now and I'm Gucci.
Mm-hmm.
So what am I ever tripping about? Because I always find my way through.
I love it. What was that word to use? What? Impervious?
Impervious. Yeah. I'm a big words guy. I like words, I like numbers. So yeah, impervious just means like you can't really, it's not bothered.
I'm gonna write that down just now. And the final question, I'm curious to know, because this one, when I was going through these icebreaker questions, I was like, what would I'm just gonna ask you the question.
Mm-hmm.
What was your dream job? Yeah, like your dream childhood job versus what you do now.
Yo, you know what's funny? I literally talked about this like the other day with my little brother, because like life just takes crazy shifts. As a kid, so I got two answers for that.
Mm-hmm.
The job that was pretty much bestowed upon me, like it was forced onto me. My mom was like, you love argue, you must be a judge. And I'm like, all right, cool. And like it was like not just a joke, like she's like, you're gonna be a judge. And I'm like, really? Oh, okay, cool. Like I guess that's what's in the cards for me. Like I'm 9 years old, my mom's telling me you're gonna be a judge. And I'm like, what does a judge actually do other than like slam a gavel? Not really sure, but I guess I'm gonna do that. My mom said that's what I gotta do. Mm-hmm. But I always wanted to be an actor. Like really? My dad will tell you this. Like if you ask my dad, what did Junior want to be when he was a kid, I'd always be like, I want to be an actor. And I'd go around the house like impersonating like things I see on TV. And it's funny you say that now, because like, am I really that far off from being like,
no,
someone
bro,
that really could see like
I'm looking at you, I'm like, yo, you could really be an actor right now.
I took drama and stuff like that in high school. I just never really like, it was like, I never took it serious. Like I was just like, yeah, this is fun.
Just natural like that.
Yeah. I just loved being able to just adopt another personality and be something like for 15 minutes or whatever amount of time.
That's crazy.
And then just go back to being me. But then I just like, can this really be a job? I don't think so. What's the likelihood of me going to Hollywood and becoming a big time actor? Obviously, this is me in my high school days. You don't really see how much opportunity there actually is aside from being in like Hollywood films. But yeah, that was what I wanted to be as a kid.
I can see that. You still have room to pursue.
You never know. It might be in the cards.
Well, again, thank you for answering the icebreaker questions. Again, just to loosen up, you know what I mean? Loosen up the guests. So I would like to give you an opportunity to truly introduce you, introduce yourself and what you do.
My name is Royston. I am a mortgage professional. I am a real estate investor. Content creator, and just your overall
hustler.
Yeah, I feel like I'm a jack of all trades. I do a little bit of everything. And yeah, that's just who I am. It's been a long road to get here, but I'm very proud of where I am right now. So that's really what it is. It's a multitude of things, but they all kind of intertwine in some way. Like it's all finance and conversation related, which is I think two of the things that I'm most passionate about.
Chatting.
Exactly. Talking about money. Like let's do it. If it's one of those two things, let's get it. And that's what I'm into.
That's awesome. Sorry. That is awesome. So today we're gonna be talking about many things. But the focus is real estate. So I'm gonna title this episode Getting into the Real Estate Game. And before I get into the first question, I would say that you're well known, in the city. But I'm sure there's people still getting to know you. So I'd like, for you to share a little bit about your background, where you come from, your childhood and stuff like that. Let's start with those two right now.
So I'll give you the short version. I was born in Mississauga, grew up in Toronto. My mom, single mom, doing her thing with me and my little brother. Great parenting, I would say. I always give them like their credit when it comes to co-parenting. Like they weren't together for the majority of me growing up. Like as long as I could remember, they weren't together. But it always felt like I had both of them there should I need them there. And I don't think that's common. I don't think you hear that a lot from people. Usually like, oh, my mom did it all by herself. My dad did this by her. Like, you know what I mean? Like, but like they're really good. And grew up going between the two of them. But it was always like really, really well, a lot of education. That was just the biggest priority for them, to make sure that I was actively learning and actively making the best of myself. And grew up, went to college, went to Humber, got my business degree, and then got into the world and saw that this is interesting, to say the least. That's the word I'll use to describe my middle adult years. Bounced around from job to job, not really liking what I was doing. And then took some time off, just did some other like knickknacks here and there in between, saved up some money, got into my first property through pre-construction. And I was just like, yeah, this is cool, whatever, cool. I'll just put somebody in there to rent it out. And then it just went to like the back of my mind. Didn't really care about it because it was self-sufficient. Still trying to figure out myself, working like another job that I just didn't really care much about. Then I worked at the bank and I was like, oh, okay, this is cool. And through working at the bank, you see a lot of people in a lot of situations financially. And that's when the numbers and math and the financial system really started to sink into me. And really, I started to learn that a lot of this stuff doesn't make sense. Like if you follow the traditional quote unquote way of going through your adult life and maneuvering through careers and stuff like that. And I was like, this is a sham. So I stopped working at the bank, found like another knickknack job. And then I checked on my property because the pandemic had hit, and I was like, oh, this life's just got real. Don't have my job anymore. Let's see what I can do with what I have my money tied up in. And I saw what my property was worth, and I was like, oh,
yeah,
interesting. This is nice. Let's do it again. You know what I mean? Because now I was like, okay, so everything I learned over the past couple of years at the bank, seeing what I can just do myself by accident, essentially. I'm like, let's learn about this. And that's what led me to really just deep dive into real estate in general and the different facets of it. And I stumbled upon mortgages because I do like math, I do like numbers, and I do like conversing with people and helping people problem solve. And essentially that's what you're doing. So all those things tied up into one led me in the direction of mortgages. And voila, here I am as a mortgage agent now, as well as still dabbling in my real estate investing as well too. And just making the most out of those two things, because those two things were the most impactful for me. And I want other people to experience that impact for themselves too. So that's where I am today.
And I want to touch on something that you said, because I worked at the bank too. We don't need to touch on which
I will not.
But I've noticed that like a lot of people who've gotten to the bank, you get to see the inside tricks of things, and you're like, wow, this is how money works.
Exactly.
Especially from the inside.
Exactly.
You know what I mean?
Exactly.
And I feel like a lot of people, who are now into, real estate or into, mortgages, their footing was in
somewhere
the bank.
around there.
Yeah. Because you said it, you get to see other people's situations up front.
It's eye-opening.
And he's like, oh my gosh.
Yeah.
This
doesn't make sense.
Exactly.
And it never will. And some people don't actually open their eyes to that, and they stay in this treadmill for so long. And I'm just like, yo, me knowing this now at this age, it's so early, I got to make a shift because I was seeing people in situations, and I'm not throwing shade at all,
for sure,
but it's just situations that they were in that I don't want to ever see myself in. And it gave me an opportunity to see what I need to avoid. And that's why I need to open my eyes now, make the changes now, so I don't end up on the other end of this teller desk right now. You know what I mean? So yeah, exactly. And I'm just like, you know what? Nah, we're changing something today.
I feel you. So now I want, like, again, back to your background. Was real estate and like personal finance ever taught in the house, or
not how it should have been? I think, and this is to no detriment of my parents, obviously, like this is you can only teach what you know.
Absolutely.
So my parents were kind of very adamant on teaching me the things that would have kept me in that treadmill, much like they had already been in it themselves. So they had never worked at a bank. They hadn't had the same knowledge and tutelage that I was able to acquire now. And they were only giving me the best advice that they knew for themselves. But it took me kind of taking a separate course from what they were leading me down the path of to kind of realize, okay, that's good, but if I can couple that with what they're telling me with other things, then maybe I can kind of optimize myself because, they were always like, save your money. You get paid $800, save $200 every paycheck, whatever, and put it to the side, put it in a mutual funds or a RSP. You know what I mean? So I got some sound advice, you know what I mean? But it wasn't also conducive to what I wanted because I think before you can give advice, you got to know what somebody wants. What are their goals? What are the things that they're intending to do?
Wow.
And that wasn't really taken into consideration. Obviously, not because they didn't care, but that matters though. Yeah. So it was taught, but just not enough of the other options. Let's just put it that way.
Well, that's I can say that's pretty good because like even something like it's just okay if you make 800, take away 200, put in for savings, mutual fund. I never like my parents. Again, no shade to them.
Yeah,
but I've never heard of a mutual fund until I was like 23.
I didn't get that advice at like a tender age of like 15 or when I first got into the workforce. Like,
okay,
I got that like maybe 19, 20, 21.
Okay.
But they did also give me good advice, such as like, if you can pay for school out of pocket.
Yeah, instead of OSAP.
Exactly. So that is stuff that I had the luxury of knowing and implementing before getting too far down the line. So I graduated with no OSAP owing, no nothing like that, because I hustled my ass off and then paid it outright. You know what I mean? So those are things that I'm grateful for now, looking back, because I got to avoid certain hurdles that I think a lot of people are kind of facing later on in life. So there was a lot of sound advice that was given to me, and I'm very grateful for that.
I love that. Shout out to your parents.
I want to shout out to them real quick.
So I want to move on to the next segment. And you have a YouTube channel, so everyone go shout out to
Who's By TV.
Yeah, Who's By TV. And you touch on, you have certain videos that touch on finances, and I guess that's how we got connected. That's how I got introduced to you. I was dabbling on YouTube and so I'm like, sound advice. And I would love to know, like, where did you learn the importance of budgeting and healthy practices of that?
It's funny. So this just goes back like all tying into like, I want to be an actor. Because really, truthfully, it's not even like about the acting. It's just more so like I like to entertain people. I like to make people laugh. I like to make people feel good. And I got into the YouTube cheapskate stuff. And to clarify, so Cheapskate Chronicles was like a little nickname I gave to my antics that were really just to save my money, because I was known as like the hyper cheap person. Like I was like, the Royston, he's frugal. Like I got like that was like my reputation. Royston's cheap. Royston's this, that, and the third. And these are all the reasons why Royston's cheap. And I was very boastful about it. I'm like, I'm cheap about this because I don't think I should be spending my money on that. And I used to do like nonsense on Snapchat. Like I'd be like, I'd go to like the gas station and I'd pump like $19.98. Or no, sorry, $20.02 because they discontinued pennies. So they'd have to round down. So I got 2 cents for free. And people were like, you're actually out of control. And I'm like, am I though? So
sorry, that's what that is hilarious.
I'm like, if I do this 50 times, I just saved a free $1. Like, you know what I mean? So, but nonetheless, like it was just nonsensical things. But nonetheless, I was just like, the goal here is to make sure that I'm making the most of my money. And from doing jokey things like that, it slowly ramped up into like, okay, well, like, how do people actually like not just make a lot of money, but keep a lot of money? Because that's the key. A lot of people make a lot of money, but a lot of people spend it all. And that's really what takes people who could be rich to like moderately living or being poor. So I was just like, okay, let me find ways, literally like for my own benefit, to make sure that I'm optimizing my financial situation. Like no matter what it is, like I don't want to be spending money frivolously on things that don't matter. I want to make sure I'm getting the best possible deal for whatever it is that I'm doing with my money. Like I want the best bang for my buck, no matter what the situation is. So when I found ways, I was like, let me show people about this. Like I'm putting everybody on. Like I'm like, I did this, you can do it too. So like, I just want to share the knowledge with other people and make it fun and enthusiastic for other people to take in as well. Because a lot of the things that I was doing or listening to or reading to kind of help me along my financial journey, like it was boring and I hate reading. So I was like, I like to talk. I like to watch things visually. And I was watching videos about people that were trying to like teach me something. They taught me stuff, don't get me wrong. But I was just like, it should not be this boring to take in what it is that you're trying to give me right now. So I was like, I can do this better. So I just hopped on YouTube and I just did it.
Show your personality.
Yeah, show my personality. It was nice. You know what I mean? And I already do it on Snapchat anyways. I'm just taking that Snapchat story, making it a structured video and putting it on YouTube for other people to watch who are not my friends. You know what I mean? So it was no different. And I think that that's really how Cheapskate Chronicles originated. And it wasn't necessarily being a cheapskate. It's like, okay, I'm trying to like shortchange people or I'm trying to be frugal, quote unquote, but I'm just trying to make cheapskate. To me was just someone who was making the most of their money and optimizing the best bang for their buck. That's really all it was. So, you know, that's where that came from.
So you'll say it's safe to say that you were always like that, like from birth. Like, you know what?
I was always like that.
It just was born out the womb.
Yeah, I was my dad's got 4 kids. I'm the third of the 4. And I was always the one that's like, yeah, showtime. Like we're gonna make a show out of this. And it got me in trouble a lot. Don't get me wrong. And even in school, like being like the person who's outspoken and doing it for like shits and giggles, and it's just like I'm in the office, but you know what I mean?
Y'all gotta laugh.
Yeah, so exactly. I gotta laugh. It's cool, but you know, so I think it was always there.
I hear you. Yeah, I can tell for sure. So I want to fast forward now, because now you're, like you mentioned earlier, that you are a mortgage agent, you are an investor, and I want to actually congratulate you again for your another property. You know what I mean?
Thank you.
Extending your portfolio, building a legacy.
4 units out here. Yes,
Doug, it's beautiful. You have no idea. That is beautiful, beautiful, beautiful.
Thank you.
And as I mentioned earlier, like this episode is about getting into the real estate game, and I want to start with the basics. Again, because you are a mortgage agent. First, I want you to explain simply what is the role of a mortgage agent, and why is it more beneficial to use you instead of going into the bank?
So a lot of people get they hear the term, and it's not always mortgage agent that they hear. They usually hear mortgage broker, which mortgage broker just means that they've been in the game for a little bit longer. You get that broker title after 2 years. So then the term broker has a negative connotation to it. And I don't know why, because even when I think of other brokers, I'm like, they did a good job for me. Like I have an insurance broker, and what they do is they take me as a driver and they shop me around with other insurance providers, and they find me the best insurance for me. So a mortgage agent does the exact same thing. And the reason why going with a mortgage agent / mortgage broker is beneficial to you as someone who's looking to get into real estate and someone who's looking to be a homeowner is because I take you, Dondre, and I say, okay, this is your situation. You know, this is your income. This is your credit. These are the options that are in front of you. Let's find you the best one for what you're trying to do. Whether that be simply just the cheapest mortgage on a month-to-month base, whether it's a mortgage that's going to be penalty light if you want to be breaking this mortgage soon because you're maybe investing, or maybe you just want to, you have some other properties and it's maybe you have to figure out another one creatively for you because you've got quite a portfolio on your hands, right? But nonetheless, I'm going to go and find the best solution for you. Whereas if you go to your institution. Sorry.
It's all good.
I fell into that same trap I was trying to fall into. You go into your bank, they're only going to present you with options that they have available to you, which none of them might be the best for you based on what it is that you're trying to do. You're kind of tying your hands a little bit.
Kind of handicap.
Exactly.
Yeah.
So all a mortgage broker does is find you the best situation for you, and they go to bat for you, and they can actually help you qualify for something. Maybe. So another thing as well that they bring to the table that you necessarily can't do by yourself is they have a leverage over these lenders that you necessarily wouldn't present. Because if I present you as a applicant to these 4 or 5 institutions that you qualify for, because I'm trying to find him the best product and solution for him possible, they know that there are other options that I have at my fingertip. So they're like, okay, you know what, let me sweeten the deal a little bit for you because we don't want to lose this business to another lender. You walk into a bank, they're under the assumption that well, maybe you're walking to this bank because you already have your checking account here. You've got your savings account here. You've got your RSP here. You've got your mutual funds here. You want to be with us.
Yeah.
So we don't have much reason to give you the best because
no competition.
Exactly. You're already comfortable here.
God.
So I have the opportunity to take you here. But if this is not something that I'm really too pleased about, I might just take you over down the street to this person because they're offering such and such. So I'm going to get the best offer from such and such institution because they have to come with their A game or else they're going to lose the business entirely. So that's added leverage that I have as well as a mortgage broker representing you as opposed to you going into your institution yourself. Because one, they're going to give you a limited amount of solutions because that's just what they offer.
Yep.
And also, where else are you going to go? You know what I mean? Because they're underestimating the fact that where else are you going to go? Most people, the average Canadian, really only bank with one or two institutions. They don't even know about the other options. And if they do know about them, they're like, why would I go open up something else with another?
It's too tedious for me.
Yeah, it's literally just legwork. You know what I mean?
Wow.
But I can go and do that for you. So that's just some of the upsides and the benefits that a mortgage broker presents for someone outside of going to your bank. Also, let's just say you come to me in your situation, you're not really 100% ready to be at your best home buying self. Like you need to do a little bit more work to bring yourself up to where you want to be.
Yeah.
You know what I mean? So let's, brush up your credit. Maybe I can tell you, okay, you know what, let's bring down the down payment a little bit, absolve some of these debts. Sure, you have less of a down payment, but now you'll qualify for more because you have less debt that you're carrying. I can help you, point you in that direction. Whereas if you go to your bank, they can't really do that because they can only see what you have with them.
And then eventually say kick rocks.
Exactly. So it's a lot of benefit on your side to go that route as opposed to going elsewhere and just going to with that one bank or institution that you're already with.
I love what you said. And I have two questions, but I want to start off with what you just said about, being able to look at a client's situation and their profile and then be able to be like, okay, point you to certain directions to help you. Is that standard for mortgage brokers, mortgage agents to do, or is that something that, it depends on the mortgage agent, the broker?
And I'm definitely leaning more towards the latter of that. Like you're not going to find the best, like it's not always going to be just cut and dry. Like not every broker is going to take that time to figure out what's best for you or take you down this path of, okay, let's improve your status before we go and look at these different lenders. It's just like if I was to ask you, if I go to this realtor, am I going to get the same service I'm going to get from this realtor? Like it's really like not everyone's going to take the same time and deliver the same service and experience to every client. And that's why it's up to people still to vet and figure out who it is that they want in their corner as a part of their team as they go on into this journey of getting into real estate. You want to get the best realtor that's going to represent you the best in submitting offers and getting you the best property and representing you. You also want to get the best mortgage agent for you to help optimize your purchasing power. So you got to do your due diligence as someone who's looking to get into that space to vet and figure out and interview who do you want in your corner to be your mortgage agent, to be your realtor, to be whatever other your lawyer that's representing you as well, to do the closing and all that stuff. Like that's important as well, because it is not standard for a broker to be like, yeah, let's assess this and let me give you pointers on how you can improve your credit score. And that's stuff that I do because I want to optimize somebody and I want to make sure I'm doing everything that's possible to get them into this space. I know it's difficult. And if I'm just doing the bare minimum, I'm not doing a disservice to them. Exactly. And I'm not doing what I set myself out to do. Like if I say my goal is to really actually help people get into this space, I've got to do my best. I got to put forth my best effort every time I interact with somebody who's trying to do something like that. Absolutely. And not everyone has that same MO. Some people are in it for the money, which kudos to you. That's fine. But you might not get the same output from them as you would from someone who's here genuinely to help you see you through. You know what I mean? So yeah.
I love that answer. So again, so like what tips do you, like what strategies would you give someone looking to, vet their mortgage agent, mortgage, their realtor, their any other
professional that they're going to be utilizing?
And what questions? Like what kind of questions?
It's tough because like I'm usually, that's a good question. Because I will say, and this is also like I love that I can speak on both sides, like as a mortgage agent, but also someone who had to get into real estate myself, right? I did not do that, and I regret it to this day. Like I remember, I got into the real estate by going through the pre-construction route. So I put my down payment down. A year later, my house was done. Boom, cool. But then I was like, oh, the mortgage doesn't come with the house. Like, why is that? Like, I didn't even know what a mortgage actually, like the process to actually securing a mortgage.
Oh, wow.
So like I got my notification that, it's occupancy is coming up. You need such and such. I'm like, oh, okay, cool. Like, why do you need this from me? And they're like,
you bought it.
Yeah, go get your mortgage. I'm like, okay. I walked to my bank and they're like, yeah, you're not qualified. I'm like, I'm like, pardon? What do you mean I'm not qualified? So I had to go find a solution. And then I was crunched for time. And now I got to go find an agent that can pretty much figure this out for me.
Yeah.
And there was a lot of agents that fed me a lot of false hope. And they ultimately didn't pull through for me. But one did, thankfully. Wow. You know what I mean? But that was the importance of, I got to be proactive and put together my team beforehand. You know what I mean? Because I ran the risk of losing my down payment, losing the house, getting sued, just because I didn't even know what I was doing and not taking the proper preliminary steps beforehand. You know what I mean? So all that to say, it's really on you to interview whoever and however you choose to make sure that you're comfortable and you have someone that's going to be representing you in the way that you want to be represented, right? Like as me as the mortgage broker, I'm open to all conversation and I'm open to any type of profile client. Like whether you're high profile and you're going to be qualified like this for A lending and top of the top, or you're someone who's struggling to kind of fix their credit and their down payment is kind of bad, because I feel like everyone deserves the same type of treatment. You know what I mean? You start somewhere. The person who was the double A client that's sitting pretty right now, they started somewhere. And I would like to be the agent that helps someone get to that status. You know what I mean? Because I think that's far more valuable. So either way, a lot of conversation, and it is a two-way street too. Not every professional wants to take on every client. Yeah. So I think it's necessary to have those conversations where it's just like, okay, you know what? Like, are you the best real estate agent for me? But also for that real estate agent to be like, you know what it is that you're looking for, I don't actually specialize in. Maybe I'm not the best real estate agent for you too. And that's big, because you want to make sure that it's still a mutual relationship, right? You want to make sure that you're not, like, if you're not enthused about the type of client that you're representing because you're not confident in that area, you don't specialize in that area, you're just like, that's just not your typical clientele. You're not going to give your best effort. I think it's a lot more optimal for on both ends if you guys are just like, you know what, this isn't a mutually beneficial relationship.
Yeah, be honest from the get.
Exactly.
Say, hey, you know what, I don't specialize here.
Exactly. Maybe I know someone that does.
Exactly.
You know what I mean? So that's why I think it's just conversation. Have that conversation. It doesn't have to be a structured interview. Get a feel for people. I feel like even myself, I think it's not even just about me being able to crunch numbers and figure out what your ratios is and what you pre-approve for. You want to like who you're working with. This is someone you're going to be talking to on a regular basis until you get the transaction closed, maybe even afterward as well. You don't want to just be like, okay, cool, you get the job done, I'm just going to suffer through this. You want to be someone that, you know, like that you enjoy speaking
how you
with.
Doing?
You know what I mean? Yeah, exactly. Because this is more than just a transaction that is like, okay, I'm taking in this, you're getting that, cool, have a nice day. This is we got to link up for showings in a realtor's scenario. Like, you got to link up for showings, you got to have conversations on the phone, you got to have you've got to submit offers together and figure out exactly what it is that you're trying to do. Like, it's a lot more than just, it's not cut and dry. So same with mortgage agents, I've got to have conversations with these people on a more frequent basis than most jobs. You want to make sure you're not dreading every single conversation, every interaction, because is the money worth to that degree? Probably not. So it is a two-way street. And that's just some advice I would give to anybody that's looking to kind of secure someone that's best for them. You want someone that's going to help you get the job done to the best of their ability, but also you want to have that personability. That's the word, personability. Yeah, it's someone personable. Yeah, someone that you're gonna like. Yeah.
I'm not the one who's bigger words than that. You know what I'm saying? No, but as you guys can, you know, see, and also as you're listening, you know, Royston is someone that you want to take and take into consideration, because as you can see, it's not about the check. And you run into a lot of people, and unfortunately I have run into a lot of people who are just transactional based, and the feeling that you get from it is not a good feeling. So again, take his words and take the advice of, you know, you want to get a feel of who you're gonna be working with, and who has your best interest at heart at the end of the day.
Exactly.
So I want to touch on another part that you said previously of leverage. I hear you saying leverage a lot.
Mm-hmm.
So can you, I guess, explain what leverage, what is leverage in the real estate or in real estate? Like what, when you hear leverage, like what's the first thing that comes to your mind? Like how do you explain that to someone when he hears leverage?
Leverage is it's a multi-defined word. Like there's more than one word, like there's more than one definition for it. Leverage can be, how much power do I have in the situation? Like what do I bring to the table that is actually gonna make me someone of, am I expendable or not? That's what leverage could also be. But I feel like also leverage could be, how much am I bringing to the table? Like literally, what am I bringing to the table and how valued is it? So in the case of me saying leverage, in the sense of me bringing Dondre to the table between these 3 or 4 lenders, you come to the table with this. Okay, this is essentially your leverage is how valuable of a client would you be to these lenders? Because if you're coming to the table with scraps, I'm being over exaggerating it. Like if you're coming to the table with scraps, you don't have nothing to read to the table. It's someone who's coming with the minimum down payment, terrible credit, and a bad track record with debt. Also over leveraged with debt as well too. It's like everyone's gonna pass on you.
Yeah.
What leverage do you really come with? But if you're quote unquote someone that's in good standing, that AA client, those lenders want you as their borrower. Like they want you to be, I want Dondre to be the person that's paying this mortgage because you're reputable.
Yeah.
You know what I mean? You're someone of value. So in the sense, that's what leverage is in that sense. Leverage could also mean, like when I said just now in that same scenario, over leveraged. Like leverage could also be debt. Like, are you over leveraged with debt? And I say over leveraged in the sense that you make $80K in income a year. Are you over leveraged in debt because maybe you make a lot of money, quote unquote? Let's say 80K is a lot. Like that's a lot of money on a yearly basis, but you have a $60,000 car loan. You've got a maxed out line of credit. You've got all of your credit cards are over limit, and you have a massive mortgage as well too. Technically, you're over leveraged.
Yeah.
You know what I mean? You're over leveraged because what you have in income is inferior to the debt that you actually are obligated to. So you're over leveraged. So when I bring that to the table now, and I'm like, okay, well, this is my client. He's trying to buy this property. How? He's over leveraged.
Yeah.
You know what I mean? Because what it is that he's taken on far outweighs what he's making to kind of satisfy those debts, and then also apply for whatever it is that he's trying to get from me as well, from a lender's point of view. So that's what over leverage would be in that situation. So leverage goes a long way, and it's multi-purpose. But once you figure out how to kind of keep yourself in a good leverageable situation, then that's the key right there. That unlocks a lot of things for you.
And I would love to get into the leverage on the real estate side of, like, let's say, would you consider when you have, I guess, room, like equity in your house, that's considered leverage, correct?
It is, because that's something of value. So you want to be able to leverage that. So you want to leverage that, and that's favorable for you, and also maybe for whatever else that you're trying to do as well too. So maybe you want to tap into some of that equity so that you can go buy another property. Maybe you want to tap into that equity so that you can consolidate some of the debts that you have outside of that property. So you have a mortgage, but then maybe let's say you're still that person who, like I said, has the 60K car loan, has the maxed out line of credit, has maxed out credit cards. Maybe you leverage some of that equity and you go satisfy some of those debts, so that now you're focusing on one debt, which is your mortgage, because essentially you'd probably refinance, wrap all those debts into your house instead, because it's a cheaper interest rate. And now you've wiped out all this other debt that was bringing you down.
Clean.
Exactly. So you've leveraged your equity into something that essentially wiped all your other debts out. Now you just have one debt that you're focusing on, and that debt is more beneficial to you because it's at a cheaper interest rate, it's more manageable. It's like
considered good debt. That's
exactly.
Considered good debt. Yeah.
Exactly.
And I'm happy you touched on that, because like I've heard many stories of people who use that leverage, or I'll use the more so the equity, and then they put themselves in a more detriment, like buying a car or do certain things. Like,
it's tough. Yeah.
That word leverage is so important. And again, as you said, it's multifaceted, but in the space of real estate, when you have that equity and you have that leverage,
Mhm.
there's so much that you can bring to the table, and it can essentially increase your value as a person.
Exactly. I don't think people realize too. And I think it's funny when you get to be in a position like where I'm at and explain to people and you see the light bulb go off.
Yeah.
Because you explain to them, well, like, let's look at it like just straight raw numbers.
Yeah.
Like you have a mortgage, typically, let's just say your mortgage interest rate is 2%. And people are very frantic or they're hesitant about refinancing because they're like, well, now I'm gonna have a bigger mortgage.
Yeah, and you have to pay monthly on
my monthly mortgage is gonna go up. But I'm like, yeah, but what if we refinance your property, refinance your mortgage to pay off this other high interest debt? Yeah, your mortgage grows up, but the payment increase on that mortgage is less than all these other debts that you're paying out to, because that mortgage has the cheaper interest rate. So if I put your 19% credit card interest into your mortgage, you just cut out 17% interest right there. I just took out your 8% car loan that's for the next 7 years. I just put it into your mortgage for 2%. You just save 6% on that as well. And I'm like, when I do the numbers, right, let's just say that car payment was $500 a month and that credit card payment was $600 a month. But and I put that into your mortgage now. So you don't have those two payments anymore. Yeah. But your mortgage goes up by $300.
Can you imagine that?
You just saved a lot of money on a monthly basis. Because your mortgage went up, yes, but everything else went down. It went down or it's gone.
Gone. Exactly.
Zero. You don't pay anything on that anymore because you satisfy that entire debt. And people don't realize that as well, revolving debt. I'm not going to call the car loan because that's a fixed loan, but the credit card debt, like that interest is compounding every time. You might be paying the minimum payment or whatever payment on it, but on that outstanding balance still, you're still gonna be incurring more interest. But if we put it into that fixed mortgage now, we finance into that, how long is outstanding is not going to continue to compound more interest for you. So that's what people don't understand. And that's just where financial literacy comes in. And what you were saying, it still comes down to discipline, because if I do that refinance and I do that wonderful thing and I wrap all those other debts into this mortgage now, and now, yes, you pay a little bit more in mortgage, but you pay nothing else. But you now have a free credit card with no balance on it. And you have what are you going to go do? Are you going to go rack
Gucci.
It back up? You know what I mean? And that's
Here I come.
That's why it's like, I could do all the work for you. But it's still, at the end of the day, you have a responsibility to make sure that you're acting responsibly. Because a lot of people see that credit card with no balance on it and they think that's their money. It's not. And you now I've cleared it out for you. If you go rack it back up now, you're in a worse position.
Probably,
now.
Exactly.
So that's why it's like, I really need people to understand what it is that they're doing before they go do it, and what it comes with, because there's a responsibility behind that. And that's where a lot of people fall into that trap. And that's the same thing as like debt consolidation. People will be like, yeah, I got a debt consolidation loan from an institution. And I'm like, that's great. But I'm like, you know yourself. You got into the situation once and you know what comes with it. And some people don't learn that lesson. But if you go get that consolidation loan now and you wrap everything into one loan, are you going to go rack everything else back up? And then now you're even in a worse position. And that's why some people just keep floundering in this ocean of debt, because they think that, okay, I'm in the clear, but then they're like, let me just go buy this, buy that. And then they slowly get themselves back in that same situation. But now they have that consolidation loan also
on top of it.
So it's like, you did yourself a disservice. So there is a point of discipline there, because any other financial professional can't save you from that. That's on you. That's your responsibility.
Financial literacy.
Exactly.
And you said it. Because you have a credit card, that is not your money.
It's not your money.
That's borrowed money, people.
Exactly. You do owe that back.
Yes. I did not know that when I first got my first credit card.
Nice.
Because when you get to that balance, like, I have this at my disposal.
Yeah.
Like,
let
me get some food quick.
Like, main shots. I'm on that. And then you're like, whoa, main shots costing me this much. It's the main shots, but also the convenience that they lent you the money to go buy that main shots comes with the price, man. And when you see the price of that, you're like, it's a little, until it snowballs. And then that's when you're like, whoa, how did I get here?
Yeah, and that's a big word right there, snowball. So we're gonna stay on the topic of leverage, but I want to also tap into another way you can use that leverage,
Mhm.
which is private lending.
Mhm.
So
very good topic.
I want you to just really just basically say or answer, what is private lending?
Private lending is pretty much like, picture your credit card.
Mhm.
You have, let's just say if I got a $5,000 credit card, that's your limit, right?
Mhm.
And you get it fresh. There's no balance on it. You have $5,000. Go do whatever you want with it. Private money is the same thing, it's just not on the card. So you go get some funds,
Bruh.
but you've got to have a plan in place. You're not just gonna say, hey, can I get a $5,000 loan? What's your plan for this money? Like, you know what I mean? You got to have a plan in place. And once you get the funds, there's gonna be a price tag on it for me to let you use this money. So someone's lent out this money to you to do X, Y, and Z. It's on you now to do X, Y, and Z, because you're paying for time with this money. It's yes, the convenience of having this money now, but you're paying for the time and the convenience of having it. And there's a price tag on it. So you've got to make sure that whatever it is that you borrowed that money for, you execute with it. So the benefits of it is you can use essentially this money to do whatever it is that you set out to do. You have the opportunity now, because I realize that in this economy and at this time as well, it's tough for people to save up money to do X, Y, and Z with. It's not always easy. It's not always that cut and dry. So
For sure.
having someone lend it to you now gives you that opportunity that you otherwise were maybe struggling to obtain. Like, you now have this chance to go doing whatever it is you want to do, and this is what's on the line. You're paying X amount of interest on it. It may even be secured to something else. And what a security is, for people that don't know, is like, that's the leverage. Like, you may have another house, or maybe it's a house that maybe your parents own. Whatever it is that that private money is secured to is what's on the line should you default. And defaulting basically is you don't pay this money back in the time frame that's agreed upon when I gave it to you. I gave you this money for a year. You don't give it back to me in a year.
I can go after.
I'm going after whatever it is that you put on the line as basically it was like your promise.
Security blanket.
Exactly. It's like, okay, well, this is what I'm gonna have here in the middle of the table. You can take if I don't make good on my promise. You know what I mean? So that's exactly what a security is. But the benefits of it is pretty plentiful if you know what you're doing and you can execute it and you plan for the money. Makes you
more money.
And I don't want to say more money specifically, because it could be something else that's of value to you.
Yeah.
But primarily it's mostly money. So let's just say you have a plan in place that's going to make you $100,000, but you need 20. Like, I need $20,000 to make this $100,000 plan work. Okay, cool. So you know that whatever your plan is to make X amount of money is going to bring you this. Is the cost of borrowing that money going to be worth it for you? And that's up for you to figure out, to decide. That's where you got to figure out, okay, you know what? I can get this done in X amount of time. It's going to bring me X amount of return. I can do this. But that's where it's on you to kind of crunch your numbers, know what's at risk, and plan everything out and have something structured in place to execute. So it can be beneficial. And I've done it a couple of times. Most recently with the property that I did acquire. So let me, I guess, give an example of how private money could be used.
For sure.
So for an example, let's say you want to go buy a property that is fairly priced, undervalued preferably, and it's going to cost you a down payment of $30,000. But you don't have $30,000. So you're like, okay, that's going to be the cost of actually getting the property. And then to get it to the value that I wanted to get it to, it's going to cost me like another $20,000 in renovations.
Yeah.
So now you need about $50,000. But you know, because you've done your research and you've done your due diligence, you've ran all your numbers, and you know that when you get this property for such and such price, when you sell it, like, let's just look at let's say you're going to flip the property, you know you're going to make in your sleep $200,000, because the price that you got it for and the price that you can sell it for once you do X amount of work, that's your spread in between. So let's just say, okay, you know what, I need $50,000 to execute this, to $30,000 to buy it, $20,000 to renovate it, and then I can sell it and make that profit in between. And the cost of borrowing that $50,000 is going to cost me, let's just use a round number, $10,000 for the time that I'm going to be doing this project.
Yeah,
that's the time. So that's the cost of borrowing that money for X amount of time.
So altogether, $60,000 essentially.
Exactly. But I'm making 200.
Yeah.
You know what I mean?
but I feel like I guess some people get too focused on that $60,000, not understand that.
Not even the 60, because remember, the 50 is what you're going to be giving back. So if I took $50 from you right now and I give you $50 back, cool. It's the 10.
Yeah.
That's really like, oh, that's a lot.
Yeah.
But like if you use smaller numbers and you just stick to the same structure,
Principles.
it makes a lot of sense.
Perfect sense.
Let's just say I got this Gatorade bottle, but it's empty. It's empty, right? And I'm like, okay, I can get that empty Gatorade bottle for $2 right now. But I know if I fill it up, I can sell it for $20. So I'm like, how much does it cost to fill up that Gatorade bottle? How much does it cost to fill up that Gatorade bottle? It cost me $5 to fill up the Gatorade bottle, $2 to get the bottle empty right now. It cost me $7. So I can sell it for $20. Like, yo, I don't have any money right now. Let me ask Dondre for $2. Sorry, let me ask Dondre for $7 right now, so I can buy the empty bottle, fill it up for $5, and then I can sell it for $20. And Dondre says, yeah, I'll lend you the $7, but I'm gonna need $2 for me to lend that $7 to you.
Yeah. So
all in $9 it's gonna cost me, because I got to give you back your $7. I got to give you $2 on top of the $7.
Yeah.
But I'll make $11 because I'm gonna sell it for $20. Why would I not do it? But it's not just that simple. But it's like and that's where it's like, okay, you know what? Park you right there. Let me go see where I can go fill up the bottle real quick. Let me go double check that real quick. Before I come to you, I'm going to figure out where I can go fill up this bottle when I get the bottle. Okay, I found a place that fills it for $5. Okay, it takes them this long to fill up the bottle. Okay, cool. So it's going to take me 2 weeks to fill that bottle up, and I can give Dondre his money back. And I'll give myself an extra week just in case. I'll give Dondre his money back in 3 weeks. And in doing all of this, I'll be able to make my $11 profit, because I'm borrowing $7. It's going to cost me $2, but I'm going to sell it for $20. Why wouldn't I do it? I checked out all my resources. I figured out, okay, it's going to take me X amount of time. It's going to take me X amount of cost to fill up the bottle. And I'm paying for filling up the bottle with the money I'm borrowing. Why wouldn't I do it?
You see, you said it. What happens is it's the numbers that kind of scare people, because again, we're not talking about, especially in real estate, you're not talking about $2 and
exactly.
You're talking about
you're adding
a few thousand.
You're adding 5 zeros to the end of all the numbers I just used there, but the concept is still the same.
But I think, and that right there, I hope that helps people now be like, okay, cool. This seems a little bit, it's not simple, but let me simplify it as much as possible. So my next question is like,
sorry, real quick. I know people will be like, well, Royston, it's just $7. Of course I could have did it. But I want people to realize that people talk like that about $70,000 to do real estate transactions. People are like, yeah, it's just $70,000. Why don't you just do it? If I don't have $7 is a lot to me. Right?
Yeah.
So it's just about being creative and finding your solutions. If I don't have the money right now, let me find where I can find that money. What's the cost of finding that money just to execute what I know I can do?
Okay.
So it's less about the dollar figure, because $70,000 does sound like a lot. It is a lot of money.
Yeah.
But to someone in a different situation, $7 is a lot too. And if you simplify it numbers wise, you're doing the exact same problem solving and executing. That's really all it is.
So we're going to stay on that. So again, you're simply saying, $70,000 may seem like a lot to some,
and it is.
Yeah, it is. But for some people, it's not. And essentially, you want to go and find those people who may have the money. So say you don't have no money, and then this word that everyone hears in real estate and anything, OPM, other people's money.
Other people's money.
So how do you go about creating a strategy to start using other people's money? Like, how can you touch on that a little bit?
It's tough. I feel like everyone can start somewhere different. I didn't figure it out until getting into real estate already with my own money, and then wondering, I'm like, how are people? And this is me, I guess, obviously just being the nosy individual I am. Because if I did something, I'm like, okay, I did something blessed. I did a great job on this, and I saw somebody else, and I'm like, first of all, comparison is not always a good thing, but sometimes it can be you can utilize it.
Mm-hmm.
So I like to benchmark myself with other people and see where they're on, how they get there versus where I am right now. So I had saw somebody who bought their first property the same time I bought my first property. And when I was finished with my first property, they were like on like their fourth. I'm like, how? What did you do differently? You know what I mean? And I'm not saying that because I wasn't grateful for what I had done.
No, but you want to learn.
I want to know. Yeah. I'm curious.
Yeah.
Because I'd like to replicate that. You know what I mean? So when I figured out that it was a good tool to scale, because you don't need to have the money right now. You know what I mean? So that's how I stumbled upon it. But there is a greater risk when you're dealing with other people's money, because it's not just, okay, I put my $50 on the line, I lose my $50. I lose someone else's $50. There's another price tag to that, and there's other implications with that as well. I now owe them the 50 plus whatever they were charging me to borrow that 50, plus they can sue me.
Yeah,
there's a lot more risk, and not to mention whatever I had secured as well is at risk as well too. So there's a lot more on the table. So I feel like it's a lot more responsibility on the person who's looking to execute this and looking to borrow and do these things, on them to learn what it is that they're doing and do all the research behind executing it soundly, because now your wiggle room and your room for error is a lot slimmer because a lot more is on the line. So people looking to kind of get into that space and utilize those tactics, I would say two things. One, either you do a hell of a lot of research and you do all of your due diligence and you go through everything with a fine-tooth comb, because you got to know the ins and outs of everything very, very to a T. Or you do it for the first or second time with your own money until you get those reps in with your own experience, because now you know through experience what it is that comes along with this. You've done it. You know what I mean? But to dive into something head first without you have done it before, or doing the research behind it to know it to a T whether you've done it or not, is I wouldn't recommend that.
Yeah. That's great advice, and that kind of touches on what I was going to say of like what kind of circumstance would you recommend using private lending, but to get into real estate. But you kind of touched on that already. Say you want to make sure you do your own due diligence, understand the strategy, understand what strategy you're trying to execute.
Yeah,
you know what I'm saying? Because again, because real estate and this investing era has become so popular, everyone's trying to get into it.
Yeah,
but you want to make sure that you do your own due diligence, make sure that you do your research, because again, taking out the $2 and the $5 and $8, you're dealing with a couple more zeros behind that, and again, it's a lot more risk.
Exactly.
So we are going to wrap up, because and this is great. I don't want to wrap up, but I know.
It's okay, I'll come back again if you want to do a part two. I'm here
for sure. But I know I do want to wrap up shortly, and ask my final question. And this podcast again is focused on real estate, personal finance, and self development. And to make it digestible, fun, and relatable to everyone. The last question I have for you is: what advice would you give someone looking to get into the real estate game and get their first property? So I have a little bit more. I have a little bit of money, and I'm scared. Like, I don't know if this is enough. Like what advice would you give someone with that?
That's a good question, man. And honestly, I feel like there isn't just one cookie cutter answer.
For sure.
But the biggest thing that I would say is have as many conversations as possible before making a decision, because I really think that people need to know all of the options in front of them before they pick one. Because if I could go back now to myself getting into the market, I made a good decision for me at the time, and I don't regret my decision, but I didn't know all of the options I had had before me, and I may have chosen something different had I known now what I know back then. And the reason why I didn't know as much as I should have, I didn't have that many conversations. And in addition to that, I would say you really want to understand money and really understand finances as much as possible before getting into that, because I think some people don't really understand all the implications and all the benefits as well too of being in the real estate market. Like, you're hedging against inflation. You have an asset that you can use as leverage now. You know what I mean? Like, you have something that's also you're paying. Yes, you have a mortgage, but as you pay that mortgage, it's slow. You're slowly buying it back for yourself that you can utilize in the future. And it's so multi-beneficial. Like there's so many different ways to benefit from real estate that you want to make sure you're understanding all the actual benefits that you're getting from it, because that'll help you make the best decision for yourself. You know what I mean? So once you understand all of those things, I think that's probably the best. And also understand the third point that I'll say to my main one point is just manage your credit and your debts as best as possible before getting into real estate, because you really, I think with home ownership, there's a lot of expenses that people don't account for, such as like maintenance, property taxes, things that might go wrong and that need fixing out of nowhere. That's your responsibility now. And if you don't account for those things when they pop up, you're scrambling to kind of fix those things and deal with those things. But you want to make sure that you've eliminated as many other expenses as possible, so that when those things pop up, you have
a little more of a cushion,
exactly, to deal with them as they come. Because you don't have, like, if you're in a rental space, you don't have a landlord that's gonna have to go fix that for you. That's on you. You don't have, if you're living with your parents, that's not your parents' responsibility. That's you. You know what I mean? So it's a lot more that you have to kind of be responsible for. And I think that some people don't really, I was blindsided by it. And I was just like, yo, what? I'm like, property tax? What's a property tax? When they sent me the bill at the end of the year, because I hadn't paid it all I hadn't paid it all year. I shouldn't have said that. I'm transparent. I didn't pay my property taxes all year. And when I got the, was it $3,300 bill at the end of the year, I'm like, what? Because the whole year I had been collecting my rent checks, cashing them out perfectly, paying my mortgage. I'm like, I'm making $400 every month. This is lovely.
Out here making money.
I'm out here making money. Yeah. Okay. This is blessed. And then my property tax bill came at the
Hello,
end.
sir.
Yeah, you owe 33. I'm like, 33. I'm like, I make $400 every month. I'm like, I ain't make no money. You know what I mean? When I did the math. But then I really took it in that if you're not accounting for these things in real time, you spend the money that you're actually profiting from it. So when I pay the $3,300 now, it wasn't actually the $400 I had made every month up until this. It was out of pocket because I had spent the profit already. So I didn't account for these things. So it's just something that I would like ask. My piece of advice is make sure that you understand money. Make sure that you have a good hold on your credit and the debts that you are obligated to. And just figure out exactly what it is that your plan is and all the options in front of you, because there's a lot of things that you can do in real estate. It doesn't necessarily have to be home ownership specifically. It doesn't have to be, I have to be a landlord. There's a lot of ways to make money in real estate.
Trust me.
And maybe there's another way that's in the real estate space aside from the typical, buy, rent out, and make the profit every month scheme that is maybe more beneficial to you,
like private lending.
Exactly. Maybe you don't want to be the person borrowing the money to execute a plan. Maybe you'll be the person lending out the money so someone else can can execute their plan, and you just collect your checks passively.
Exactly.
So there's a lot to really figure out and learn, but those are definitely some of the little tidbits I leave behind for anybody listening.
Royston, let me tell you something. This is probably one of my favorite episodes.
I had fun, bro.
I want to continue. There's so much, but we're definitely have to do a part 2 because
let's do it, man. I'm here whenever.
There's so much. Again, I would love to touch on the credit. I would love to touch on how do you manage your credit? How do you manage your debts? What are some things that we can actually cut down? But I know we're
time. Yeah, I don't want to. The people that listen to this podcast are like, damn, this is long.
Bro, I drove an hour to start talking. What's going on?
Facts.
But anyway, Royston, thank you again for taking the time. I appreciate you. You know that already. Do you have any socials you want to shout out?
Yes. Feel free to hit me up on Instagram. I've got all my information over there, whether it's to get in touch for, a mortgage pre-approval, just to talk about real estate and maybe how you can get into the market. I don't just deal with people who are looking to buy a mansion in Forest Hill. We can talk about anything, whether it's just prospective, maybe you just want to learn a little bit more, because I'm not just here to just literally find mortgages for people that are looking to buy tomorrow. I want to help people understand everything, because like we just discussed on this episode right now, there's so many layers to this, and it's and I think that's what's most fun about it is there's just so much. When
your eyes are open to all these layers,
you're like,
whoa,
you're like, this Pandora's box. So yeah, feel free to give me a shout. My Instagram is whosfly, WHOSFLYY 2 underscores. Subscribe to the YouTube channel as well, Who's Fly TV, which Dondre will be proudly representing himself on a couple episodes as well, where we're talking about financial literacy. And yeah, give me a shout. I'm here, whether it's questions, whether it's inquiries, whether it's business, whether it's just to have a nice conversation about real estate and money. I'm here for it. And yeah, it was a pleasure.
I appreciate it. And also you can follow me at DHomerRealEstate on YouTube. Well, the DHomer Real Estate podcast on YouTube and on TikTok. And then you can also follow me at the DHomer Real Estate podcast on Twitter. You can also listen on Spotify, Apple Music, no, Apple Podcasts. I always mix up the two, and Google Podcasts. All right. So thank you guys for your time. Enjoy the rest of your day or night and stay blessed.
Peace.
Peace.